Hey, what's up, everyone? Good morning. Sean Trades here again with the market analysis. Here's a little bit of an update going into this week. Obviously, we had a very bear dominant week last week. Not only that we invalidated the annual uptrend, we continue to trend lower, creating lower lows and lower highs, which basically means each bounce is merely just a corrective bounce, and it's just a way for the market makers to liquidate more retail so that they can drive the price action more impulsively to the other side. As far as the levels are concerned, right now, ES, we opened up with a small gap up right here from the Friday's low of the 5,000 level, and we opened at around 50, 70, 50, 20 area. Still trading sideways with some minor pullback currently we're seeing right here. We can draw like a small channel or a flag, I should say. We could see maybe possibly another choppiness throughout this flag, and we could possibly reject again and make a new low because that's basically how the bear channel works, right? You can draw something like this here, something like that here, right? Except for this liquidation wick, we're gonna kind of leave that out since that was an impulsive move. But as far as touches, looks like this is a channel we are currently in now, and we're already sort of slowly rejecting at the upper range of the ES channel here. We still have plenty of time to market open, and we have a lot of things ahead of this week with core PCE data, and of course, plenty other Fed events. So, never know what's gonna happen. But as far as levels, if we do take out the gap up low of today, so 5,009 level here, expect a quick gap fill down back to the 5,000 level. And if we fail to hold the 5,000 level, expect another drop, at least down to the Friday low of 49.63. And if we can't hold that either, right, we'll draw another support line right there, right? Lots of buying pressure at the 49.60 level, as you can see from the past price action here as well. So, not being able to hold this for the bulls would be pretty brutal, because if we give this up, the next real support we have down is all the way until the 48.76 level, which is gonna put SPY pretty much sub 480 level on SPY. So that's that. For long side, I'll be really cautious going long here, unless we can take out 50-70 level. And the reason why I say that is because let's get from the 4 perspective. This is a level where we were able to hold the two lows and pushed all the way to the 5300 all-time high level, right? So this is a level that we have to hold, and if we do somehow break back above 5070 level, we can expect to push at least to the previous trend line here, which would put us at 5100, 5120 level, equivalent to about 509, 510 on SPY. So those are my levels for ES. I'm gonna take these out. And now let's go to SPY. Very similar to ES, obviously small gap up here. And we do have this small trend line going on. Again, very similar to ES because they do both follow SPX. My play on SPY, I'm gonna wait till how we play out first, but I will look to short if we can push all the way back up to the 499, 500 psychological level here. As you can see, there's a lot of session volume here loading up. Until then, it's really all low. So these lower volume bars are going to be very easy to break for the momentum, and we might get stuff here. And if we do see bearish confirmations, I'll look to short again. If we somehow hold above 500 and we see buying pressure come in, the next PT for the upside will be very technical. Again, nothing extraordinary. We're just strictly going by the charts on the technical levels. 503, and then we got 506 next. And if we even continue higher, I got 510, which is going to be the previous demand before the trend line broke. So those are the levels. As far as downside, again, I'll either short at the pop here, or if we actually fail to hold this gap up and take out Friday's low, 494 level, then expect a drop all the way down to sorry, not 491 here, right? Because I got the support level right here, right? And then we have really the next level down here is 483, which we just discussed on the ES. And after that, things can get a little more ugly down to 467, 470 level. I'm not sure if that's going to happen just yet. As you can see on the momentum indicator, stochastic RSI here, we are very overextended to the downside, and it is signaling upside movement here, as you can see. So at least for the corrective relief perspective, we are going to see some sort of bounce, but I wouldn't go too heavy on it because in the times where we're seeing consistent creation of lower lows and lower highs, a lot of the bounces are very choppy and hard to time. So I'll be very cautious and really look to just play shorts once we get the right bounce we need. Thanks, guys.